Chris made over $50,000 in a single week, and he did it using a strategy that is so simple and so easy, anyone can do it. And in this video, I'm going to dive in the charts and show you the exact strategy and method he used to make this happen. I'm going to share with you guys a trading checklist that you can keep at the end of the video so you can use it over and over again for every trade and have the same results just like Chris. And if you guys don't know who I am, my name is Jordan. I'm a full-time trader and I've mentored over 400 students in just the past year and a half. I wanted to dive into Chris's $50,000 week because it's the most amount of money one of my students has made within a 7-day period. And no, the strategy doesn't involve supply and demand, which is typically what I trade. In fact, it's made up of two really simple concepts, but when put together is a superpower strategy that makes you a ton of money. And if you stick until the end of the video, I promise you'll walk away with a clear step-by-step plan on what this strategy is and how you can do it for yourself to make big profits. Okay, so I'm going to dive into the exact two-step strategy that Chris used to hit his $50,000 week. But first, I want to share with you guys the actual trade he took to make this happen. Because he took it on NVIDIA. It was a really incredible trade, and it was actually a lot easier than you think. So the way he got in was actually right here on this candle like so. Okay, so he bought on this pullback. You can see NVIDIA has been just trending up like crazy for a while. Huge, fast move higher. We had a nice little pullback, started scraping up a little bit, and then boom, we get a little pullback. He buys in on this dip on this candle here, and he gets out right at this candle here. I can show you like that. Okay, so it was a very simple, like 3 or 4 days in the trade, just in and out. And obviously he missed a massive move higher, but nonetheless, he made 50 grand. Okay, he made a really good profit. He followed his plan, and that's all you can do as a trader. Now, what is the first concept he used to actually make the trade, and what is the strategy? Well, the first one he used is something called trend. And I'm sure you guys all know trend. Trend is very easy, like simple concept, but I like to break it down really simple because a lot of people overcomplicate it like crazy, and it's really not that hard, okay? And at the end of the day, trend is really simple. It all comes down to higher highs, higher lows, and lower highs, right? Because there are going to be times where price is going to be in this kind of back and forth, kind of crazy, choppy, routine, and you're not quite sure what trend actually is, right? Sometimes we get wedges, right? Sometimes price will kind of form this wedge like this and we get really tight and we're not really in a trend, right? But keeping it back to the basics, right? Are we making higher highs and higher lows or lower lows and lower highs, right? And if we are making higher highs and higher lows, we're going to see an uptrend, right? If we're making lower lows and lower highs, we're going to see a downtrend, okay? And simply by looking at NVIDIA, like it doesn't take, a baby could honestly understand this, right? It's very clear we're in an uptrend, right? This thing just likes to keep going up and up and up. And yes, this is just a small dip and a pullback for a larger trend higher. You can see this happens time and time again, right? How we go from a huge uptrend where price is making higher highs and higher lows in this area here to a medium term, downtrend where we start seeing lower lows and lower highs like this. And then we eventually reverse back higher, okay? And the reason this is so key is because in a higher time frame uptrend, right, in this overall huge trend we have like this is just a pullback, right? This move right here is really just a pullback, right? But in the smaller kind of time frame, if we zoom in a little bit, you can see how it's actually in a downtrend in for relative amount of time, right? So it's always important that you're looking at time frame relative to trend and use it to your advantage, because in higher time frame uptrends, you're going to have downtrends in the middle and in between. And so if you can understand the time frame perspective, you can go ahead and make a lot of money doing that. Now, the way that Chris actually traded this strategy is really simple because he wasn't just trying to trade trend. What he was doing is waiting for trend changes, right? And so what always happens is, in an uptrend, price will be making higher highs and higher lows. And then we get a downtrend where we start to see lower lows and lower highs. But eventually something happens where trend changes back to the upside. And so what Chris was looking to do and what our strategy is we want to look for that change in trend, right? We want to look for that move that happens right in this area here where we start to see patterns of trend changing, right? That is also aligned with the higher time frame trend. So if we're in a long time frame trend like NVIDIA is here, okay, and then we start to zoom in a little bit and we say, okay, NVIDIA starts to pull back. We start to see a downtrend form right here. We go low, we go high, we make another low. Now we have higher time frame alignment, right? So what are we going to do? We're going to wait for price to show us that it's going to make higher highs and higher lows again or form an uptrend so that we can go ahead and look to get long on this pullback for a move higher, okay? We're not just going to randomly buy somewhere on this pullback. We're going to wait for trend to tell us that it wants to move back up and then trade based off of that. And so the way to do this is actually really, really simple. All you have to do is simply zoom in a smaller time frame and then just figure out what trend is doing. Figure out your pivot points, your highs and lows, and go from there, right? So you can see, obviously, NVIDIA is in a higher time frame uptrend. If I zoom in a little bit here, we're going to go on to like a 2-hour, let's say. What do we start to see happen, right? We start to see a high here, a low here, and we start to see a lower high here, and then a lower low here, right? So price is now going from this movement of making a high to a lower high to a lower low. That starts the downtrend. Then we see another pullback up here. That's another high, and then another low down here. Okay, and we start to see price form a downtrend. So what do we want to see to then look for price to move up so we can buy? Well, it's pretty simple. We want to see an uptrend form. And an uptrend is going to form when we start to see higher highs and higher lows. So what does price do? Price bottoms. We form a high. We form a low. Does this low end up breaking this low and end up going lower? No. We actually make a higher low, and then we push up again and make a higher high from here. And that is the start of our uptrend. Okay, so we actually are able to identify that this uptrend starts at this moment in time right here. Okay, and this is really, really key. You can see how we are in a downtrend. Now we start to see an uptrend form. We have a high. We fail to break this low, so we have a lower high. Then we push up again. We see a higher high form, and then that is our start of our uptrend. So after this, it gets really, really simple. What do we want to do? If we know that we are now in an uptrend here, and higher time frame, we're in an uptrend, so we believe that price can get back to this high all the way up here, we simply want to just get in on a pullback for a move higher. And the second part of this strategy comes into play. I'll talk about that in a second of more execution, but we simply just want to wait for pullback and play with the trend. Again, the trend is still up. And once we identify that we are now in an uptrend from a high to a low to a high to another low, we simply want to get in and catch this wave. Okay, so it doesn't even matter if you got in here, right when you identify the uptrend, or whether you get in here. The concept of this theory by itself is that price is going to continue higher. And that's exactly what price did. And I want to talk to you about in a second is literally the exact other concept we use to get a really good entry and where to put your stop loss and everything like that. But it's really, really important that you have a good understanding of trend and using this to your advantage, because you want to make sure that the higher time frame is always in alignment. Because like I said, in a higher time frame uptrend, we are going to see a shorter time frame downtrend form. And what you want to do is wait until you start seeing higher highs and higher lows form again. And then in this area is where you go ahead and catch the move. And that's where you can bottom and catch the crazy, crazy moves higher. And that's exactly what Chris did to hit $50,000. Now, the second part of the strategy is what we use. It's called Fibonacci's. Now, Fibonacci's are actually a very popular thing, and a lot of people trade them in different ways. But there's one way that I like to trade them that makes it really, really simple and really easy, and it just works extremely well. And it's by only looking at the 50% retracement mark. Okay, so if I take my Fibonacci tool, I go from the bottom of this low all the way up to this high. All I use is this 50% retracement. Okay, now Fibonacci technically is usually going to have a bunch of different settings, right? 0.618, 0.786. These are really common ones you can use. But again, you don't want to get too complicated with it and just keep it really simple. And I always use just the 0.5, and I'll explain why. The 0.5 is really, really, important, because what happens is markets are in a range, right? Markets are going to be range bound, right? If we have this low right here and we have this high all the way up here, we need to think of this market as a range of a product. Like, let's say this product is at $780 and then it goes up to $888. Well, fair value, or quote market price, is going to be right in the middle of that. Okay, which in this instance is going to be right around $835. Okay, so we can just draw that in like that, right? So $835 is kind of our mid price, or our market value, or what we call fair value. And if I'm an institutional buyer, if I'm looking to buy, I want to be getting in at a good deal or a discount compared to what is considered fair value. And so the way that you trade this is you simply just want to buy anywhere below this 50% mark, okay? Because anywhere below this 50% mark, that's where institutions are going to be buying. And that's where you're going to see these bottoms form for a much move higher, while also simultaneously giving you a much better risk reward. Because again, if we take a look from this low to this high, if I'm getting in right at the 50% mark, and let's say I put my stop loss below the strong low right here, and I put my target right at the high that we just formed, that's going to be a 1-to-1 risk reward. If I'm getting in anywhere below that 50% retracement mark, it's going to be more than that, right? If I get in down here at the lows, it'll be about 2.26 risk reward, just like that. So all I'm simply doing is taking advantage of market makers who are saying they want to get in below 50%. So the odds of price bottoming below 50% is much higher than bottoming up here. Because yes, even though I could have bought all the way up here in this section, right, above the 50% retracement mark, I still am not taking advantage of every market opportunity I can get, right? Because yes, obviously with trend, price would have still worked out, I still would have made money, but you would have a much better risk reward buying in below that 50% retracement. And that's why it's really, really important. If you're always simply using trend and buying below the 50% retracement mark, or shorting above the 50% retracement mark, you're going to see a much better result because you're always getting a good risk reward and you're always following the higher time frame trend. So you're likely have an edge in the market. And so that's exactly what Chris did to make this trade. All he did was see that, okay, now we are in an uptrend. We have a high, we have a low, we have a high. And so at this point in time, he knew that he wanted to buy on a pullback for a move higher because he was expecting price to move all the way higher, take out all these other liquidity levels here, here, and then eventually up here. And so he was aiming for these targets, and he knew as well that in an uptrend, lows are going to hold, right? So if an uptrend forms, we see a high and then a low and another high, you want to be able to put your stop loss below that low. You know that that is a logical stop loss because otherwise, if price ends up breaking this low, trend has now shifted. Trend is now going down, and so that's when you want to get out. So the reason the strategy also works is because you have an idea of where your stop loss should be. And then for your targets as well, you simply just want to target high in liquidity, right? So for targets, it would be the first high here, which would be right here. Oops, should be right here, right? That's around a 1-1 risk reward if you're getting in at the 50% mark. And then you just take profits at other liquidity levels, other recent highs that happened in the past, which would be here and then right around here. You can see price went right up to those, then consolidated, then pushed a lot higher, okay? And so this is the trade that Chris did to hit $50,000, okay? He simply noticed we were in an uptrend. He noticed this was the most recent low we had that formed the newest high. He drew his retracement level out, drew it right there. He also coincided and knew that there was a supply and demand zone right around here. Again, we didn't really use that factor into his trading, but it's still good to have, still good to know. So we got in right here at this 50% retracement mark, okay? So I'll just draw it like this. Put a stop loss below this low right here. Took some partials out at this first high and then took the remainder off as we pushed up on this move here for about a 1.5 risk reward, okay? Really simple trade, simply using trend, simply using Fibonacci and the 50% retracement mark. You can use this strategy all day and repeat it over and over again on pretty much every single stock and every single time frame. It works. And just to show you guys one more example of how simple and how easy this can be, if I go to AMD on a daily time frame and I zoom out way back, you can see how obvious this gets, right? From 2022 to 2023, this stock has been in a downtrend. You can see it's very clear, making lower lows, lower highs, lower lows, highs, lows, highs, and lows, just like that, okay? As clear as can be. And so what do you have to recognize is just when does prices start making higher highs and higher lows? When does that trend change? You can see it trends very different. We have a high and then a low, and then a high and a low and a high and a low and a high and a low. And so at any of these pullbacks, right, you could have got in for a long for a move all the way higher. Okay, you could have waited for a 50% retracement mark and then buy, and then you would have made a lot of money simply doing this, right? And so if all you're doing is waiting for price to go from a downtrend to an uptrend, you're going to make money as long as it's aligned with the higher time frame, which AMD is. AMD's been an uptrend for like 10 years, right? So simply by doing this, you could have got in on basically any of these pullbacks and you would have made money. And if you put your stop loss right below the most recent low, you would have been fine, right? Let's say you notice that the uptrend starts here after we have a high, a low, a high. And then you buy in this pullback here. Stop loss goes there. Price goes up, you move your new stop loss to this low. Price goes up, new stop loss to this low. Same exact thing. Price goes up, new stop loss to this low. And you never would have gotten stopped out. There's like 4 different opportunities where you would have made money where price retraced more than 50%. We came down and we ended up making new highs and just exploding higher. And so simply by using trend and Fibonacci, you can make a lot of money using this exact strategy. Now, I want to give you guys a breakdown of a simple checklist that you can use for this strategy. And if you follow every single step on this checklist, I promise you, you will have a strategy that is going to make you money. Of course, you have to be using it with proper risk management, but if you do those 2 things, you are going to be profitable. So the first part of this checklist is to make sure that you're actually trading liquid stocks. And it's really important you do this, especially if you're going to be trading options or shares. The last thing you want to be doing is getting screwed over option spreads. And so by picking only liquid stocks like SPY, QQQ, Apple, Tesla, Meta, the big name stocks, you're going to allow yourself to only trade with high liquidity names, so it means you never have to worry about the spreads or that being an issue in your trading. The second part of this checklist is making sure that you're entering only when the retrace of the move has been more than 50%. As we talked about earlier, it's really, really important that you're not getting in above that 50% mark because that's not where institutions or smart money is going to be buying. So as long as you're getting in anywhere below that 50% retrace mark, you're in the clear. The third part of this checklist is time frame alignment, and this is so key. It's really, really important that you want to make sure that the higher time frame is aligned with the lower time frame. Meaning, if we are in an uptrend in the higher time frame on the daily or the weekly pattern, But on the smaller time frame, we're in a downtrend and we're heading lower, we don't want to be trading that stock. What we want to do is wait for the lower time frame trend to align with the higher time frame trend. So on the 30-minute, 15 or hourly candle, if that time frame is in an uptrend and seeing higher highs and higher lows, we also see that on the daily and weekly time frame where we're seeing higher highs and higher lows on the swing trading perspective, then we can go ahead and put a trade together because we know that we are in time frame alignment, which is going to give us a much better edge in the market. Now, the last part of this checklist is to make sure that you're putting your stop losses in the right place. And this is a huge mistake I see a lot of traders make. You want to make sure that you're putting your stop loss below a strong low or above a strong high if you're looking to get short. This is really important because in a classic uptrend, there really is no telling where the exact bottom of a move is going to be. However, if price breaks a strong low, then we know the trend is changing, which means the trade thesis is invalidated. Putting your stop losses below a strong low is just a logical way to trade. It means if this goes below this low, there is a highly chance that price is going to continue to dump, and we want to be out of that position right away. So always make sure you're giving your trades enough room and having your stops in the right place to catch these trades and not getting stopped out before the move actually happens. Now, this checklist and strategy is only going to work if you have a clear understanding of market structure. And so what I've done is I put together a free market structure course for you. And I've put it inside the Vault, which is my 4,000 plus student community that has 5 other courses, live trading every single week, and a million other tools and resources to help you out as a trader. I'm going to leave a link in the description for you to get access to this completely free so you can learn market structure, use this checklist with it, and start making a lot of consistent profits. With that being said, I hope you guys did enjoy this video. Go ahead and leave a like, subscribe, hit the link in the description down below so you can check out the Vault and get access to that immediately and join 4,000 other students who are making money using these strategies. See you guys in the next video.